Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Stock Market This Week. Let's begin with a favor I'm going to ask of you. Right now, I have 807 subscribers to the YouTube channel. I'd like to get that to 1,000 by January the 1st. And if you want to get my videos in the future, you'll be notified if you just simply click this bell here, and they tell you, they do a push notification. They'll let you know when a video is posted. I'll ask you to like the video if you actually do like it, and subscribe to my channel and leave a comment below, please. Okay, what are we going to talk about today? I have a lot of items to go over. The items I'm going to talk about are items that our members submitted for me to discuss on video. It's part of their membership. So let's go to the charts. All right, the first topic up today is going to be the VIX. For those not familiar with the VIX, it's the volatility index. It trades inversely of the S&P 500. Now, we have a problem. It's a big problem with the VIX. And the problem is this, is that the VIX, it broke out back, this is a weekly chart, folks, a weekly chart. It broke out the week of October the 6th on RSI, one of my favorite indicators. RSI was in a wedge formation. It broke out. It is now pulling back and retesting the breakout point, which means that we may even see lower lows on the VIX, if you could believe that. Now, why is it so unbelievable that the VIX can go any lower than where it is right now? The reason is that we made a new all-time intra-week low last week on the VIX. What does that mean? What it means is that we made an intra-week low, not a closing low. Why that matters is that you found that there were volatility sellers looking to unload their positions as we hit new historic lows. Now, I'll come back to this chart. I want to put this chart into context, historical context. So this is a weekly chart. Let's pull back. Let's go to, what do I have up? Let's go to a quarterly chart, high level view. Okay, so here we have it, VIX quarterly chart. Take note of RSI. I'm going to come back to this, but if you are a bear on the market, then you should be in love with the RSI on this chart. I'll come back and tell you why I think it's just spectacular as a short of this market. Now, the VIX on a quarterly basis, we'll come back to RSI. The VIX on a quarterly basis, it made a new quarterly low, but believe it or not, we're still up on the quarter. Now take note of where we stand historically on the VIX. We are trading lower on the VIX right now than before the 2007 financial crisis, and way lower than the dot-com bubble back in 99, 2000. Now, you may be asking, Bob, what's the problem here if there's complacency in the market? What does this all mean? Wrap it up for me, please. Sure. The problem is this, is that, remember that the VIX trades inversely of the S&P 500. We'll go to a chart of the S&P 500 in a moment, but we do trade inversely of it on the VIX. So if the VIX rallies, that means the S&P 500 is going to go lower quickly. What it also means is that given the fact that we have such complacency in this market, that the market is susceptible to a major sell-off given a catalyst, whether it be a bank going down, whether it be a political event, whether it be a geopolitical event with North Korea, who knows, right? The market is susceptible to a major sell-off. And remember, before I go back up to RSI, we are at all-time lows on the VIX. It's crazy. So back to the RSI. As a bear on the market, because I am now building a short position on the market, why am I loving the VIX? The VIX actually broke out of downtrend channel in Q1 2015. And all we've been doing is, yes, we rallied higher, we pulled back. Even though we're making lower lows on the VIX, take a look at the RSI. It's holding support. So you're seeing the RSI hold up strong while the VIX is under a tremendous amount of pressure. That is very, very bullish for the VIX. So what I'm looking for is a breakout. So remember, we're in the second month of the fourth quarter. We still have a little bit more than a month to go in this quarter. Anything could happen, but the probability of the VIX breaking down is very unlikely. The probability of the VIX holding support or even hooking up below the previous high last seen in Q4 2016 is very, very good. So keep in mind, the odds favor bulls on the VIX, meaning if you want to buy volatility, the odds favor you. Okay, as promised, let's talk about the S&P 500 on a weekly basis. We saw a breakout on the S&P 500 last week, and the rally was on very light volume. You could say that it's an abbreviated week. Okay, that's fine. But this was really light volume to see on a breakout on the S&P 500. Not good. I am not loving the quality of the breakout. Now, I'll also point out a problem with the S&P 500. Take note of the Stokes. These are the slow stochastics. You have a series of lower highs, but then we broke out. This is on the news of a tax deal. And we had this final leg, I believe it's a final leg, of this bull run. Because prior to that, you saw the Stokes actually break down to new lower lows. So we're putting in lower lows on the Stokes when we roll over now. That's a signal that the market was losing a bit of steam, but it was able to rally back and rally back due to all the chatter with regards to the tax cuts, and especially when the tax cuts were passed in the House. Now, last week you had Janet Yellen. She was talking about how inflation is very low. Has anybody gotten their property casualty bill for homeowners or auto insurance? Have you seen a decrease in your healthcare insurance? It's crazy. Everything's going up, right? So according to Janet Yellen, there is no inflation, but the market's rallied on that. Why? Well, it's expected that they're going to raise rates in December. But if she's saying there's no threat of inflation, then why raise rates in December? The reason is that they want to get ahead of the next recession. So in all probability, they're going to raise rates, but I think this is going to be their final one. Now, to wrap up the S&P 500, do I think that we are heading higher in December? In all probability, we are. There's only a couple of trading days left in November. And given this breakout last week, the path of least resistance remains higher. But what I will point out is that when you go back to 2013 forward to present day, seasonality for the month of November, the S&P 500 has been up 100% of the times. For the month of December, and this may sound odd given the Santa Claus rally you always hear about, the S&P 500 has only closed up 50% of the time. So when you go back and you take a look at the VIX, and you see that we are at all-time lows on the VIX, and we know that the VIX trades inversely of the S&P 500, and that the odds of the S&P 500 closing higher are only 50%. After we have a historic lows on the VIX, the probability of the S&P 500 being very volatile in the month of December is very, very high. All right, let's talk now about the NASDAQ composite. This is a daily chart. We continue to press higher. We are leaning into the upper band of the rising uptrend channel on the NASDAQ composite. I think that we're probably going to get a pullback fairly soon. Volume has been dropping off dramatically. If you want to blame it on the abbreviated week, sure, we could do that. But this is really a dramatic drop-off in volume. So a warning flag is on the track for the NASDAQ composite. And we've had 3 back-to-back up days. One of the stocks I've been asked about is Zynga. Weekly chart. Do I like it? It's okay. It's looking good. what we have here is a stock that has been clubbed like a baby seal. You have an inverted head and shoulders set up on a weekly chart and on a monthly chart. Left shoulder, head, right shoulder. We broke out of the neckline right here at, let's call it 3.08 back in March, and it's been off to the races. So now what we're doing is that we are leaning into the upper band of resistance. We did so last week, and we closed above it. So the chart looks really good. I happen to like it. I expect that we will probably trade sideways and consolidate along this support level. Volume for the past 2 weeks to the upside has been very light. That's a concern. We have broken out on both stochastic and on RSI, the relative strength indicator. So the chart looks good. I'm a bit concerned about volume. MACD looks poised to press higher. So Zynga looking good. Next chart up, Marvel Technology Group, weekly chart. Now, Marvel has a seasonality going back to 2013 for the month of November being up 100% of the times, and in December 75% of the times. So what we have here is a stock that's already gone parabolic. We're leaning into the third standard deviation Bollinger Band in red. We are trading above the 2 standard deviation Bollinger Band in green. I'll save you the technical jargon about this, and I'll put it simple. It's not supposed to be here. So if we're not supposed to be here, we can't really buy the shares. Can they move higher? Absolutely. I've seen stocks trade above their third standard deviation Bollinger Band, especially if they're heavily shorted, multiple weeks. Volume last week, outstanding. Beautiful. This is the type of volume that you want to see as a stock is breaking out to new highs. So Marvel Technology looking good. Manitowoc, Stiefel Nicholas gave Manitowoc an upgrade. Seasonality with Manitowoc since 2013 is that for the month of November, it trades up 60% of the times. For December, however, only 50% of the times. Now, looking at this weekly chart, you have to love these brokerage houses. Wouldn't it have been great if they gave you the upgrade back here when the shares began to break out of this downtrend, or after the sell-off as it began to recover, or after they broke out of this consolidation here back in August? That would have been great, but they wait until the horses left the barn, and now they're upgrading the stock. Go figure. So we see resistance above at $42.12. I wouldn't buy the shares until we closed above that level, or until we pulled back and retested this support level here. Now you're seeing lower highs on RSI, lower highs on Stokes. Does that mean you sell the stock? No. What we're looking for is a double bottom setup on the stochastics and then a breakout. Same deal here with RSI. While we have a lower high, we don't have a lower low yet. So the RSI is not broken. What we're looking for is a breakout. And then you'd look for, obviously, a breakout on price. But you can have a breakout on an indicator prior to a breakout on price. I call that an indicator leading price performance. So Manitowoc looking good. Seasonality is not favorable. I will caution about Ultimate Oscillator. Ultimate Oscillator is breaking down. We have a double top on Ultimate Oscillator, and it broke down below prior support last week. A double top on ADX. So I think these shares are going to take a pause here. Maybe get a pullback for the month of December. The next chart up, Hanes Celestial. All right, so on the prior chart with Manitowoc, I was talking about indicators leading price performance. Now, with Hanes Celestial, we have a breakout above this upper band of resistance. So we have RSI leading price performance, see, because you don't have a breakout on price. So it can lead price performance. Now, The problem here with Hain is that you saw sellers move in. This is a topping tail. When you see a topping tail on a candlestick, that is selling pressure. And that selling pressure is not a good sign. What it signals, actually it is a good sign, I'll tell you why. What it signals is this, is that the market just sent you a sign, a signal, that you have sellers above and they can't wait to get out. They've been sitting with these shares from a high of $45.61, which is the last peak. Those are the people that will be selling now. And they've been sitting through this downtrend. All they want is their money back. All right? They're not looking to make $1. They're just happy to get their money back, and they're going to sell. That's exactly what they did last week. So I wouldn't buy these shares until we got a breakout. And the seasonality for Hain Celestial is that for the month of November, the shares trade up 50% of the times. The month of December, they trade up only 50% of the time. So a caution flag there. I see no reason to go buying the shares of Hain Celestial right now. Let it prove itself. Let it break out above this upper band of resistance and close there on a weekly basis. Or let the shares pull back to prior support and then buy it there with a stop loss right below. Simple as that. There's no pressure on you if you don't own it. The pressure is on you right now if you decide to buy it, is to decide, where am I going to put my stop loss order? If you didn't buy right, then the problem is that you would have a problem figuring out where you're going to put your stop. You have to figure it out. Is it a percentage basis, or am I going to use a prior support level like 38.96? It makes it a little bit more difficult. It shakes you out of a position if you don't buy at a support level or buy on a breakout. So you run the risk of being shaken out of your position when you buy prematurely. Okay, the next chart up is Monster Beverage Corp, a NASDAQ stock, symbol MNST. Now, this is a weekly chart. What we're looking at here is a stock that is broken out of a multi-year consolidation. And it broke out in September, consolidated, and then swoosh higher. Now, would I go buying the shares right now? No, I can't. The reason is that we have a risk-reward issue going on here. Too much risk, not enough reward, because a couple of reasons. One, we're trading up and into the upper band of the rising uptrend channel. You could argue it's gotten ahead of itself. Two, while it's caught an upgrade from Cowen, the seasonality does not favor the shares. For the month of November, historically, the shares, this is, when I say historically, it's from 2013 to present day. For the month of November, the shares have traded higher 80% of the time, but for the month of December, they've only traded higher 25% of the time. So just keep that in mind. How would I make this trade? I would look for a pullback and a retest of this lower band of the rising uptrend channel. Or if it pulled back, retested 57.25, which marked a pivot point here, a breakout point, I would consider buying at that level. And ideally, the rising lower band would coincide with that support level. So that would be a good entry point for MNST, and I would use a stop right below the lower band of the rising uptrend channel on a closing basis. Remember, these are weekly charts. Volume last week, very light, good stuff. Chart looks good. I just wouldn't buy it right now. Could it go higher? Sure. But I wait for that pullback. Next chart up, Amazon. Amazon.com, NASDAQ stock. Everybody knows it. This is a weekly chart. So what we're looking at here, what a week last week. We had a nearly 5% move last week. Now looking at our indicators, money flow rising, Stokes very strong, RSI still reasonable. Our proximity to the 3rd standard deviation Bollinger Band and the 2 standard deviation Bollinger Band is definitely a concern. Our seasonality for Amazon for the month of November since 2013 is that it trades up for the month of November 80% of the times, but for the month of December only 50% of the time. So keep that in mind if you're thinking about opening up a position on Amazon right now. I wouldn't do it. It's gotten too far ahead of itself. I would not be a buyer. Could it continue higher? Of course it can. Daily chart. Yeah, this is a stock that has really gotten ahead of itself here. I can't buy these shares. You have the shares leaning into the 2 and 3 standard deviation Bollinger Band on both a daily and weekly basis. Volume's been good though. I have to say that. But I can't buy these shares right now, especially when you take into consideration seasonality. Not for me. Kroger. All right, so Kroger is a New York Stock Exchange traded stock, NYSE traded. Weekly chart. This is a stock that I spoke about several weeks ago. It's posted on the blog, Best Stock Charts. What week was that? I think it was the week of October the 30th, right before the breakout. I said, watch it. It broke out, and it's had a heck of a month. How high are we on a monthly basis? 11.64% on the month. A huge month for Kroger. Back to the weekly chart. We had a down week last week, no new weekly high. So it looks as though we're going to pull back and we're going to consolidate here on Kroger. Now, seasonality for the month of November since 2013, it's traded higher 60% of the time. For the month of December, 75% of the time. So given the seasonality effect, it looks as though we still have the wind at our backs on Kroger. The path of least resistance remains higher. Daily chart. All right, so on a daily chart, we have some overhead supply here. Buyers back here, they want their money back. We had a bearish key reversal on Friday, meaning that we traded higher, then reversed to close lower on the day. That tells me that in the very short term, we're going to get a pullback here. Let's put some lines up, and I'll illustrate the current consolidation. All right, so we're in a triangle formation. If we break out above this upper band of resistance, thumbs up to a buy, assuming that the shares close above this upper band of resistance on a daily basis. Now, if we break down below this lower band of support, no way. You have to stop out of the trade if you're swing trading this. If you're an investor, then stick with it. You still have seasonality at your back for the month of December. Volume to the downside on Friday was very, very light. That favors bulls. So Kroger, short term, a little bit of weakness. Longer term, looks like it's going higher. All right, the last chart of the day is WYNN, W-Y-N-N. And before I get into this chart, please, if you watched this long, hopefully you've gotten some value out of the video. Please give me a like. Also, hit that bell button. You'll get notified of when I send out new commentary. As a matter of fact, I have more commentary coming out tomorrow. And please leave a comment below. And remember, our goal is to get to 1,000 new subscribers by January 1st of next year. So please help me meet that goal. All right, back to WYNN, weekly chart. What a beautiful chart. Where do I begin here? We had an inverted head and shoulders set up, left shoulder, rounding bottom, right shoulder, neckline. It broke the week of March the 13th, 2017, and it hasn't looked back. We consolidated for several weeks here. We broke out the week of, in earnest, broke out. November the 6th, the path of least resistance remains higher for WYNN. It looks really good. You have all your indicators. They are validating the move higher. What does that mean? Well, sometimes RSI and Stokes, they don't just send you signals validating a price move higher. They could send you a signal that, you know what, they're trending down, yet the share price of a stock is moving higher. That's a divergence. So there's more ways to use these tools than technical analysis for dummies will tell you. So The share price is being validated by the indicators. How's our volume? Volume is a concern. It's definitely a concern. Volume is very light, especially on the breakout. It broke out here the week of November the 6th, and volume is very light. So if I had a concern here, it's definitely volume. What does that mean? It's simply an indicator, another indicator of institutional demand for the shares. Mom and pop buying 100 shares cannot continue this bull run higher. So just be careful. Let's go to a daily chart. Let's take a look at that. Very light up volume here. I would not buy the shares right now. I would wait for a pullback, an orderly pullback, a consolidation, and then a breakout on WYNN, Wynn Resorts Limited. And that's it, folks. Thanks for checking in. Please remember, give me a like, subscribe to the channel, and hit that bell above, and you'll be notified of future videos. Thanks for stopping in, and enjoy the remainder of your weekend. Be well.